welcome to the CNBC TV18 special discussion. I'm Shireen Bhan, and we're going to be in conversation with a very eminent set of panelists here to talk about India's economic future. Let me just set the context of where we stand today. India is among one of the fastest growing economies in the world. We've got some very good news that's come in yesterday from the World Bank, where we've jumped 30 places on the ease of doing business rankings. We're now at 100, so we have scored a century for those of you who are into cricket. The Prime Minister has laid out a vision of a new India by 2022, and that does incorporate a bunch of ideas, including better healthcare infrastructure, sanitation, housing for all, and based on that are the structural reforms that the Indian economy is currently taking forward. The goods and services tax was implemented on the 1st of July, and there is an effort now for a higher degree of formalization. But there is still a very significant gap between India's aspiration and India's current reality. And how can we bridge that? Those are some of the issues that we hope to address and answer today. Let me introduce you to our panelists. Joining us from the Government of India, the Secretary of the Economic Affairs Department in the Ministry of Finance, Mr. Subhash Garg. Also with us, the former Chief Economic Advisor to the Government of India, Ashok Lahiri, and the Chairman and Editorial Director of one of our leading newspapers, Business Standard, TN9. And gentlemen, appreciate you joining us here on this special program. Mr. Garg, let me start by asking you, sir. And I want to talk about where we currently stand and what the aspiration is. The fear has been that while government has been investing in public infrastructure, government has been really leading the charge when it comes to investment, domestic investment, private investment has yet to pick up. Do you get an indication now that perhaps we are on the cusp of some sort of a revival, and that, to quote Rajiv Kumar, the Vice Chairman of the Niti Aayog, the recalcitrant domestic investor is now going to start investing again?
Precisely. I think you see the private investment channel, which was sort of weak for quite some time, and you didn't see the investment coming from the private sector. Other engines of growth were firing reasonably well. That's also turning around. You see in a number of ways. The core sector number came yesterday, growing at 5%, which indicate the IBC is resolving the stalled projects, etc. Those are also turning around. You see and the output gap also in the economy, which was created because of large investments in 2008 and 2011, is also closing now. So everything indicate to me that going forward, the private investment channel would also be contributing its might to the growth story of India.
Okay, let me talk to you about the one big announcement that's come in from the government, and we're still awaiting more clarity on that. And I'm sure that global investors would like to understand what the roadmap is as far as India's banking sector is concerned. The government has announced a mega recapitalization plan of 2.11 lakh crores, which involves a recapitalization bond to the tune of 1.35 lakh crores. We still don't know how the recap bonds will work. But the concerns on whether this is going to add to the fiscal deficit, the government has tried to address those. And eventually, is recapitalization going to lead to consolidation and albeit even privatization of the public sector banking system?
See, the main decision that there would be a recapitalization of banks to not only meet their capital requirement, but also to put additional capital for them to grow businesses and make investments. That has been made, that has been announced. The principal instrument would be the recapitalization bonds. And recapitalization bonds, as we all understand, is basically the investment by banks in the bonds issued by the government using that money for investing in the equity. So that framework is very clear. What is still being worked out is whether this should be inside the government, in the sense that the government would issue those bonds, or we can use some investment vehicle or other means of doing it. What should be the terms and conditions for these bonds in terms of interest rates and in terms of the SLR status and all. So those are being worked out. It's a matter of only a few weeks. And some amount of recapitalization would definitely take place within this financial year, and the rest in the next year. That's the program which has been announced. So this is a decision which is on way to implementation now.
Okay, so you're saying that some amount of the recapitalization will happen in this financial year. And before I get the other two panelists to comment on this, you know, the apprehension is that this recapitalization plan shouldn't end up being throwing good money after bad. And hence, what is the larger game plan now as far as addressing some of the problems that we've seen within the public sector banking space? Also, the government articulated when it came to office that it sees the need to create, you know, 5 or 6 large banks. So there was a need for consolidation. We haven't seen that take off. Will recapitalization lead to consolidation, and how soon?
This recapitalization plan is not a simple putting money into the banks, right? This is going to be linked very much to the reforms in the banks. We would also be making assessment of each and every bank involved, whether they are good enough to do business going forward, or they should be sort of used in narrow bank kind of way, where consolidation might help in building efficiencies, etc. Consolidation might be the way forward. So, and there would be also other reforms inside the banks about their ability to sort of make assessment, appraisals, lending. That kind of capability need to be there, because what you saw between 2008 and 2012 was also partly because of the inability of these banks to do the good lending. So all these are part of the reforms and institutional building, strengthening aspect of it, and the capitalization would be linked to that.
Okay, but consolidation unlikely, any move towards consolidation unlikely in this financial year?
Only if the consolidation promotes efficiency. It allows a bank to become more efficient part of a larger consolidated bank. If not, it's not going to be there.
Okay, Nainan, let me come to you now. And to pick up on both the points that, that we just heard from Mr. Garg. One, that the economy is bottomed out. We are on the cusp of a revival, and the government is hopeful that not just public investment, private sector investment is also going to pick up. And two, your thoughts on recapitalization and whether this provides the sort of stimulus needed at this point in time.
The first question is easy to answer. There is a, I think we have bottomed out in terms of the growth slowdown. There are clear signs that there's a recovery which has started and will gather momentum. So the news in terms of growth from here onward is going to be by and large positive. That's the way I see it. I don't as yet see the recovery in investment that Mr. Garg mentioned. To a very large extent, the drop in credit growth was not primarily because of the bank's position. It was because if you talk to the bankers, they kept saying, you show us a project, we'll finance it. There are no projects. So I'm not sure if that has changed as yet, but the government has launched these major investment programs in the railways and transport generally. So things like that will make a difference. But private investment, as yet, I don't see the kind of recovery that we need.
A quick response from you, Mr. Garg. Nainan still not convinced that we're going to see a pickup in private investment, largely on account of the fact that we're also sitting on pretty significant idle capacity across a lot of sectors. But do you see the demand push kicking in as well?
Let me point out for your information. I think only the PSBs, public sector banks, were not actually growing in lending. But the private banking space was lending at reasonably good rates. What also probably we have missed out, and which is a part of this larger investment story, is enormous increase in the corporate bonds market. So what you see used to be at about the levels of about 2.5 lakh crores a couple of years back. Today, this year, we have seen over 6 lakh crores investment coming into the corporate bonds, which is funding this investment. And you've seen the revival in the equity market. So the kind of issues you're seeing both from the public sectors as well as private sectors invest. So if you take in all together all these sources of financing the investment, the equities, the bond market, as well as the growth of credit from the banking space, including private, I think probably there is a story to believe that the investment will pick up.
If I may just come back on that. Mr. Garg is sitting in a more advantageous position, but I do want to say, number one, that when you say that the Indian corporate sector is across the board over-leveraged. By definition, you want the leverage to come down.
Yeah.
So you can't expect credit growth to be rapid when you want leverage to come down. Number one. Number two, therefore, the growth that you see in the bond market and in private sector bank credit, a lot of it is not going for fresh investment.
Sure.
They are getting rid of their problems. And they should get rid of those problems. And there is a process and the time that it will take. So my point is that fresh investment, fresh projects, the figures from the Center for Monitoring Indian Economy, you know them as well as I do.
Yeah.
New projects are at the lowest level that they've been in a long time. So while everything that you say is correct, I don't think from that you can conclude that investment is recovering.
I would agree with you. Over leverage is the fact of life.
Yeah.
But let us give good chance to the IBC process.